Good evening to everybody. Welcome to the webinar, Biden or Trump, Tracking the Market's Direction After the US Election. I'm Ming Hui from Flip Futures, and this webinar tonight is held in collaboration with CME Group. Speaking to us will be Mr. Wong Kon, investment and trading strategist with over 20 years of experience in the financial industry. He will be sharing with us his insights on how the election results will shape the markets in the short and long term, as well as if we can expect more volatility or if the uptrend since Trump's administration will continue. Before I pass this on to Kon Hao, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box because we will have a Q&A session towards the end. And now, without further ado, let's have Kon Hao speak to us.
Yeah, hi. Thank you, Min Hui, and thank you, Philip Futures, for having me back. I also want to thank you, the sponsor CME, for participating in this very honorable event here that I believe a lot of us has been hearing a lot of about US election, the pre-election, but tonight is the night that is the key that I have this honor to deliver this. So tonight, I think what I'm going to deliver here is I'm not going to give you the political science of the election. What do you mean by political science? Political science means that with Trump or Biden's mandate, their policy, what they're going to roll out, how will that shape the economy? How would it shape the market? Those are more of the political science study. But I think tonight, we just want to bring you something a little bit more interesting. The topic that I always, or rather the analysis that I always use is the behavioral science. If Trump were to win, I think up to this point, we still have no idea who's winning, right? So if Trump is going to win, and how is the market reacting to it? And what is the market speaking to us about the market direction? So tonight, this is what I'm going to be focusing on. Let me just repeat is that with whoever who wins, what is the mass market behavior? And whatever they behave, what is the market telling us as an investor or trader? Is it likely to go up or come down from here? So this is my focus tonight. So not so much on political science, but more on behavioral science. Okay, I hope that will get you excited. It's a 1-hour program. It's going to be very fast, and I'm going to pack a lot of information to you tonight. All right, let me just go. Recommendation is not from Philip Futures. It's not even from myself or from CME. So it's for educational purposes. Right, so tonight the topic, we're going to talk about a few things. And I think we may heard enough of Trump and Biden's mandate, all this and that. But I'm just going to give you a very quick quick update. Okay, a very quick one, maybe just take less than 5 minutes so that you, for those who are not following, you know exactly between the two men, what are their mandates. So now something that I've done very interesting that during the pre-election, the US election, I did a few sessions with about this participation size, about 100, about 70. And every time after I go through the party mandates and the two different men's mandate, then after that, I will do a little survey between about 100 men, 100 participants, and about the other class of about 70 participants. Then I just want to know the result that since you know between the two men's the mandate, now among the 170, I asked them to do a survey for me. What do they think that likely market is going to go up if this man have won the election, or likely the market is going to come down? I just want to know what is their view, or do they think that markets be very volatile? But tonight I'm not going to do that on you, but I'm just going to give you the result. And it's very interesting result that I've collected. I'm going to show to you in a short while. So now, which makes sense that since the result is not officially out at this point in time, I will also bring you to a recap of what happened to 2016. Now, how to study into the behavioral science of then on the day itself, on the 9th of November 2016. How did the market react to the winning of Donald Trump? It was a very interesting night that night and the next few days. So I'm going to do a recap so it will give you a background on how to utilize this market psychology to make better judgment in our investment and trading. And briefly, I'm going to cover about Trump's term. During the last 4 years, how did the market fare? So I'm going to go straight to the market. How did the market fare? I don't think I'm in a position to say that who is better than the other. I think that's not my job in this delivery, because this delivery is really to help you to look at the market to make a better judgment. Okay. Now, so I leave it blank. I thought that tonight I can fill this up, but I guess I still have to leave it blank for a while. Now, so my objective is that at the end, we're going to study the live market. I thought that we will know the result by now, tracking the market direction with Trump or Biden wins. Okay, so but anyway, we're still going to do that later on, and I hope that we have reserve the last maybe 10 minutes for some Q&A before we end off at 8 p.m. Now, so like what I say, tonight we're going to study into two things: is to study into the mass market behavior, their reaction to the win of Trump or Biden. Now, then I think the more important thing is that with their reaction, the mass market reaction that received the news of the winner being a United States president. Now, when they heard this news, of course, the market will shake a little bit. Now, we're going to study into the mass market. What is exactly the mass market, their behavior? What are they telling us? With either Biden or Trump win, the behavior that they have reacted, what is the market speaking to us? What is the market reacting to this man's mandate? What do they think that the market likely will go up or come down? So this is what we're going to talk about, how to study into the market itself. Okay. Now I just want to move on very quickly. Just want to give thanks to our sponsor tonight, where I just want to highlight a few slides about CME, and this is some liquidity that they have. That was 4 years back on the 9th of November election. The futures pick up a lot. The futures index, the E-mini S&P, all these futures pick up a lot. You could see that during the Asia time zone, the market pick up a lot. So these are the few things that I felt that's really interesting that you can scan, and you can read more about it after this session. They will talk about the fine-tuned index exposure, how to protect the market against sharp move, access to capital efficiency with OTC alternative. Do scan this or take a picture. So after this event, or maybe this weekend, you're free, I will encourage you to really look through these few things. Just to showcase some of the E-mini index, S&P index, over the past years, they have really grown. The volume have grown from glory to glory. Okay, so this is NASDAQ. You could see that they have grown as well. And we have the Russell, which I really like a lot. In fact, I think the last session that I conducted with Philip Futures, we talk about Russell. Now, Russell is also very important here, is that in Russell, you track the 2,000 mid-sized stocks of New York Stock Exchange, which are very important as well, because they represent the majority of the workforce of the United States. So but tonight I'm not going to talk about that as well. But so even the mini Russell have picked up, if you could see that 2020, the year have not closed yet, but the volume have already surpasses the historic, okay, the previous years. All right, just want to also introduce you to this micro E-mini index from CME because of the success of the E-mini indexes. And last year, May, they also wrote the micro E-mini. It's really micro, so it makes these index available for really men on the street to participate in trading the outright futures, the micro E-mini futures. And also, if you are into hedging your position, it comes really handy. So basically, in short, I just want to introduce very quickly is how to understand and know all these micro E-mini indexes. Very simple. So basically, what you need to know is that every 1 point worth how much. For S&P, 1 point is 5 US, NASDAQ 1 point is 2 US, Dow Jones 1 point is 50 cents US, and Russell 1 point is $5 US. So basically, the whole idea for index trading, or you hedge with index, is just that simple. Basically, if 1 point is 50 cents US. Now, say for example, Dow Jones right now is at 27,250. You take 27,250 times 50 cents US, it represents 13,625 US dollars. It also means that you're buying a basket of 30 stocks, US stocks, worth 13,625. It is just that meaty. So I always like index futures since the beginning of the times where I worked in the CIMEX trading floor. That was in 1997. my first exposure in this financial market was on the trading floor itself. Since then, I always like all this futures derivative. As long as you know the quantum, the important thing is never about, in my opinion, it's never about the margin. It's always about the quantum, how much cash notional value you're holding overnight. That means whenever I trade, or whenever you trade in future, whatever exposure, whether you're buying to 1 micro mini or 2, if you buy to 1 micro mini, it represents 13,625. You just got to ask yourself this question: can I sleep comfortably with this quantum, 13,625? If the answer is yes, then 1 micro e-mini Dow Jones, it is for you. So are the rest. Okay, so basically these are the index today. If you times by 50 cents, you get $8,000, and 3,003, that's the S&P index today. You times the contract specs, you get 16,500. It means that again, you're buying a basket of 500 US stocks worth, literally 500 US stock worth 16,500. And Nasdaq, of course, you're buying 100 tech stocks worth, at this point in time, 22,400 US dollars. Okay, I'm just going to stop here, and I'm just going to go to my key tonight. Okay. Okay, I think there's just a few more slides here, is that you could see that the volume for micro E-mini S&P, especially when the pandemic kicks in, the volume have escalated a lot. It also means that it's such a much needed product in times like this. Okay, so this is just a demonstration of the Asia, the pie that the Asia trader, the Asia investor, how they use all this micro E-mini micro E-mini index used as a hedge, have grown over the month. Grown over the last 2 years from 4% market share. Today is about 10, exceeded 10% market share. Okay, because of the success of the micro E-mini, they also introduced the option S&P and Nasdaq, which is also very important. So later I'm going to showcase that in 2016, 9th of November, on that day itself, I saw an opportunity how I also use an option-like kind of instrument to participate in the market. So I hope that when the announcement is made officially, the market will have that opportunity. Maybe not tonight, but the next few days. How are we going to keep track of the market reaction? All right, so this is the last slide, and there's a lot I want to share, but I thought I'd just keep it in QR code format. These are the headers. So what you could do is just do a snapshot. You take a picture, and when you're free, you can just go and visit all these information that have created by CME. Okay, so these are the last few slides. I just want to thank CME for sponsoring me to come for this event tonight. Now, let's go to the core subject tonight. Okay, so 15 minutes have passed. I have another maybe 35 minutes left to deliver what I have to do tonight. Now, so like what I say, I have a lot of pre-US election, not a lot. I have 2 in total, 2 US pre-election talk in different environment. The first one was participated by about 100. The second class were about 70. And what I did was we discussed about the belief between Republicans and Democrats, and also the belief, the mandate between the 2 men. Now, after that, between each class, I wanted to participate and tell me about if Trump wins, what do they think? Because 100 size, class size, or 70 class size, it gives me a very good sample to understand about the market. But you have to also bear in mind that mostly the participants are the Asian participants. So I cannot get a sense what if I would be in US delivering this topic. So at the end of what I presented at the mandate between these 2 men, I gave them this survey. I say, if Trump is going to win, what do you think that the market is going to be bull? So I give them a choice to have a thick, or they can have maximum 2 thick. If they find it's bullish, you put a thick. If bearish, put a thick. If they find it's bullish and volatile, they can put a thick, 2 thick as well. So at the end of it, I find that the result is quite, I would say that's surprising, but I would say that is a affirmation of what myself and perhaps yourself are seeing from this result that I have, this survey that I've collected. But I'm going to review to you very shortly. So tonight we're not going to do this survey. Okay, we don't have time to do that. Now, just very quickly, just going to go through. I'm not going to go through everything, but just going to flash on the screen that you can just quickly study them between the mandate between Republicans and Democrats. Okay, so every slide I'm just gonna flash out about 10 seconds. So if you want to go into the political science to study about the mandate, the belief, and how would that impact the economy, let me know. I can send the slides to you after the session, but give me about 1 or 2 days. I'll tidy them up, our email to you. Okay, so I give you instruction how you can receive the slide later on. Okay, so the next one, we study into the mandate between Trump and Biden. Okay, so I thought of there's a lot of issue. Now these are prepared by Washington Post, but I thought I just I clean it up, and we discussed about just a few topics. These are the few where I felt that it will impact the market more directly than the other domestic issues. So we discussed about that. So after that, I asked the 170 the different class to participate in the survey. What do you think that different men, when they win, the market will become bull, bear, or become more volatile? Okay, something like that. Now, so very quickly, you just take about 10 seconds to scan through, yeah, between the two men on coronavirus response. Now, next will be the economy and trade. Okay, if you want, you can take a picture. Then you can study at your own pace the political science behind all these. But tonight we're not going to talk about political science, but we're going to talk about the behavioral science. Now, what is behavioral science? Basically, we're studying into the price reaction of the result. What is the market speaking to us as an investor? What is the confidence or the fear that they have? So we're going to study into that tonight. So these are on taxes and entitlements, and this on healthcare, okay, and this on foreign policy. Okay, 10 seconds up. And this on immigration. Okay, now, so after that, like I say, we're not going to do that tonight. I asked the two different class and I tried that twice and I got a very similar result at the end of it. Okay, I'm going to show you the result later. So at the end of it, I asked all the participants to participate and I think all of them participated. Now, I say that you can have more than one tick. Whether if you believe that if this man wins, the market is going to continue its bull run, or the market may turn bear, or the market volatility will pick up, or they can choose both. Okay, that means they can have two choice. Now, at the end of it, this is the result that I have received. Okay, now to me it also represents the mass market thinking. But one thing you have to understand is this: sometimes what we think that the market will the outcome of the market because of this policy, but it may not represent that the actual outcome will be that manner. Okay, so yeah, which is very true. So what I'm going to do here is that later on, we're not going to discuss about all these, but we're going to bring you back to 2016, 9th of November, when Donald Trump win. How did the price behave to give me as an investor and trader a clear mandate on 9th of November itself that the market is speaking to me that highly likely the market is going to go up from then. Okay, so this is something interesting that I want to discuss with you tonight. Okay, so what's the result? And this is what the result that I've received. Like what I said, I conducted on two class, each about 100, about 70, and I received quite a consistent reading. Now, if you're going to add up the bull, bear, volatile on Trump's side, you'll realize more than 100%. Why is it more than 100%? Is because some of them voted twice. Some of them voted twice. Okay. Now you can see that a majority of the investors felt that if Trump going to win, the market 73% chance that the market will continue its bull run. 15% say that it will turn bear, and if Trump win in the same time, the market will be 58% say that it will be volatile. Now switch over to the right side. You could see that when Trump wins, now this is what the survey have done. Now you could see that it's quite kind of tie between bull, bear, and volatile. It add up literally to 100%. So I suspect that all the participants just take one choice. Now, so it also represents that if Biden win, out of this survey I've done, it represents that the mass market thinking is that they are not sure exactly where the market is heading. This is what I've collected. Okay, if Biden win, the market will be a bit unsure. Why? Because there's a tie between bull, bear, and volatile. But however, when Trump wins, the market, it seems to me, speak to me very clearly where is the market is going to hit. But is it true? Of course, we're going to find out maybe the next few days, maybe the next few hours. I do not know. Okay, so, but again, I got to say this. Sometimes what we expect the market to be, but the actual case, it may not turn out to be the way we're expecting the market. We're having this expectation of the market. Okay, so that the market is just as such. So therefore, I just want to turn your attention tonight to how to understand about behavioral science. That means to study on the actual market behavior, the price. What is the price telling us about this man, whoever wins, that likely his market is going to go up or come down from here. Okay. Now, let's study into 2016, 9th of November. Okay. Now, let me just give you a recap. I tried to recall as much as I could 4 years back on the 9th of November 2016. Now, at the point in time between Trump and Hillary, I still remember quite clearly that most of the media favor Hillary. And most of us, including myself, we thought, and many of us, including myself, we thought that Hillary is going to win. Okay, so it's quite clear that at a point in time, Hillary likely to win, even to the point on that day itself. Now, the day itself, on the 9th of November, before they clocked the electors, right, the 270 seats. In fact, the vote, Hillary scored 3,000 more votes than Trump. Okay, but on the surprise, at the very last minute, it was such a surprise announcement that Trump has won. Now, so at the point in time, because it came by surprise that Trump became the president of the United States on the 9th of November 2016. Now, what happened then was, now this is daily chart. Now, so you could see the market was quite stagnated or pretty volatile over the past 1.5 months, which is what is happening right now. Over the last 1.5 months, it was a bit range bound, but yet the market was also quite volatile, right? Now, on the day itself, on the 9th of November, when it was announced somewhere about 4 p.m., we have a confirmation about 4 p.m. local time, our local time. So when it was being announced that Trump is a clear winner of the 2006 US election, the market just went all the way down. Okay, because the market didn't expect Trump to win. And so when the market went all the way down at the point in time I was looking at it, it speaks to me that, oh, market do not have the confidence, the stock market, or rather, or the financial market do not have the confidence on Trump. So therefore the market slammed down. But within some hours later, I think the market kind of digested that. I just want to give you the summary of the day. Is also the behavioral science. So as we study into the price momentum, the price behavior, we have to fit the story, the development into the price. Now, so it took some hours later. I think the market kind of digested that the big bang policy that Trump had back then. It was that he is determined to do a corporate tax cut. And that was a good news for the financial market, because if you have a corporate tax cut, it means that your net profit will increase, right? So then some hours later, the market kind of reacted to this idea, the Big Bang idea. The market kind of recovered very sharply. Now, first of all, it came off at the announcement of Trump have become a president of the United States. The market just sold off. But shortly later, the market is speaking to me that after they have digested, the market have the confidence. And throughout the night at about our 4 a.m., while the market is open at about 9:30, local time 9:30 p.m., but 4 a.m., 4:30 a.m. is where we are sleeping, but the market, US market closed. Now, when the US market closed, it closed with a very strong mandate. I'm talking about the price behavior itself on the day itself. Firstly, the market do not have confidence on Trump, but they finally digested that may not be a bad thing. So, and the market recover, gain back whatever it lost during the day, and close with a clear mandate that it closed at around the high. Now, this is called a hammer. Now, so many times I look at hammer very intensively. I will only qualify those hammer that have a good psychology into it. So that means let's talk about some technical here is that, yes, there will be some hammer formation all over the shop, but I only qualified those hammer that have this kind of similar, not all the time, but a similar psychological impact to this hammer. Then I'll qualify to adopt this hammer. Now, so on the 10th of November 2016, while referencing back to 9th of November 2016, my confidence arise, and I have some ideas, some investment ideas, some trading ideas that because of this particular day, this behavior, I have some investment idea and trading ideas that likely market is going to go up from here. Okay, so I just giving you a story, but if you can relate back to the whole movement, it's not just a candle, but the story behind it is very psychological. And how do I qualify? Maybe the other tips that I'm going to give it to you is that how do I qualify a hammer that has high weighting? It is not too difficult, honestly. So what you have to do is that when you look at the past behavior, so you generally could see that the past behavior, the daily range is about 300 points. But on this particular day, the range is maybe about 4.5 to 5 times more. When it is out of the norm, now usually the range at a point in time, every day the Dow Jones, the range, that means the high and the low, is about 300 points. That's the daily range. But on this day, it was about 1,200 points. There is a lot of emotion, a lot of psychology is within the day itself. So that's something that I really like. Okay. So you fit the story, you fit the psychology into it. So that's how we qualify, or how I qualify a hammer that has high in weighting. So at the point in time, you will know how to manage this trade. Okay, let me just move on to the story, the next slide. Now, so during Trump's term, how did the market fare? How did the market fare during his term the last 4 years? Okay. Now, of course, the market went up. Not many report right why the market went up, but I've concluded that it was because back then it was because of the tax cut, the corporate tax cut from 35%. Let me just go back, 35% all the way down to 21%. Okay, in 2018. Now, so this is during his campaign. He spoke about I would term it as a big bang policy that he's trying to hammer on. So which he did. I think he tried hard. He appealed to Congress, and finally in 2018, I'm not exactly sure at which month, but based on anticipation of the tax cut, this is where he won the election in 9th of November 2016. The market have rallied, okay, based on the expectation that there'll be tax cut. Okay, now so when this is done, what is his next what's the next things that in his bag that he's doing? It is the start of the trade war, right? Now, you may remember this very iconic picture where he signed tariff, and he have all these men and women with coverall stand behind him. So there's some critics why he need to do that. So then the news was this. Now he said that he's going to impose tariff of 25% and 10% respectively on steel and aluminum imports, not just to China, but to European nation and different part of the world as well. So this was the first sign that trade war was being declared, and today is kind of full-fledged. The trade war is still ongoing, right? Now let's look at the whole market behavior since the first sign of the trade war started in 14th of March 2018. Now, what could you see? I just want to give you a test here that what could you see because of these policy being rolled in? What could you see to the market? Do you think the market is bull, bear, or it became more volatile? Okay. Now, yes, it became more and more volatile, right? Now, so if you're going to invest in US stock market in maybe at 26,000 in year 2018, and today it's still somewhere around 26,000. So you don't see much capital gain, but If you are trading almost on the short term, say about between few weeks to 3 months or 6 months, then I hope that you're able to capture all these turning point. Okay, yeah. So what I see here is that volatility have been ever increasing until today, and I think partially it was because of the start of trade war, and it's still ongoing. And of course, this dip, it was because of the pandemic. All right, now this is what we're going to do now. We're going to track the market. And when I prepared this presentation at point in time, I thought that at this time, before 7 p.m. when I start my presentation, we will have a clear winner, who is the winner. But as of now, I believe that unless during the last 35 minutes as I'm delivering, things have changed. I do not know. If things have changed, please update me here, okay? So now tracking, but if you don't update me through the price, the live price right now, I will be able to tell. So now tracking the market's direction with whoever who wins. Now, but before we go into the practical session right now, let me just bring you back to 2016, 9th of November. What was my thought back then, and what was my strategy, how I do it, okay? Did I trade the outright futures? Did I deploy options or whatever? Now this is what I do. Now, for those that just join us, I just want to let you know that now tonight I'm not into the political study business here. Now, what is mean by political study? Political study means that whatever mandate or policy that this government has, how is it going to shape the economy? So that's called policy studies, all right? Policy studies. But tonight we're going into the behavioral science study. Now, behavioral science study means that what is the market telling us? What is the mass market participation telling us at this point in time? Okay. Now, that was 9th of November 2016 when Donald Trump declared that he's a winner, and the market went all the way down. And very shortly, it closed at the close of the day. It recovered all the losses and closed around the high. So this is a very classic hammer. It also speaks to me that this is the hammer that has high in weighting, and you should be serious about it whenever you see this kind of behavior with the psychology input into this whole day range. Now, so as I studied into it on the 10th of November, based on this 9th of November movement, it kind of, when I make an analysis, it kind of speaks to me that the market is giving me a very clear mandate that they have confidence in him, and it is going to go up from then to the future. Of course, the future, I do not know exactly how long this is going to stretch. Is it just a few days, a few weeks? But at that point in time, after 9th of November, I'm quite certain is that because of this behavior, highly likely market is going to go up. But again, I do not know how long it's going to go up. I just have this idea. I would like to make a purchase. Now, the thing is this. If I'm going to make a purchase here about 18,600. Now, the confidence is there, but I also have to take care of the downside risk. Now, so I calculated the downside risk. If I'm going to make an entry here, the downside risk will be about 17,400, and that was about 1,200 point stop loss. So if to trade the outrights, it doesn't really speak to me because at the point in time, there's no micro E-mini yet, okay? So 1 E-mini or 2 or 3 or 5 E-mini, it is still the notional value. Remember just now we mentioned about the cash value. The notional value is still quite large. So if I'm going to buy a E-mini Dow Jones or E-mini S&P at a point in time with a 1,200 point stop loss, outright futures or outright derivatives, is going to be very costly because back then there's no micro E-mini yet. Now, so what I do is that, but yet I'm confident that my view is this. I'm unwilling to take the risk because the risk is too high, 1,002. Okay, but yet my confidence is that likely the market is going to go up. So what can I do with such a scenario? Now, this is what I have. Basically, all these are derivative, including ETF, DLC, all these are derivatives. Now, how I deploy derivative is actually very simple. Now, I have to clarify this, I'm not an option expert, but if you say that I'm an outright market expert, yes, I'm outright market expert, means that I study into the benchmark, then I will decide which instrument that I'll prefer to deploy. So basically, all these are the leverage. So futures, sometimes they have leverage between 5 to about 10. Some other country, the leverage has up to about 35 or even 50 times. Now, how I deploy all this instrument is honestly very simple. It's all derived from your confidence level with a measured risk. Now, the more confident you are at the point in time with a measured risk, I will prefer to go for the maximum leverage, say about 5 to 10 or 20 times. The lesser confident I have, but I just have a general view, I may just want to participate in ETF. Now, so this is how I manage among all these outright instruments. But at that situation, you still remember this this investment idea or trading idea that I have. So 9th of November, I like the most. And 10th of November, I formed an idea that I am confident that I was confident that the market highly likely is going to go up. But I'm unwilling to trade the outright market because the stop loss, it will be painful if I am wrong. Okay. So what I do is that I consider option. Now, how option works is this. Now, these are all the strategies. And if you ask me that, hey, Konhao, what do you think which strategy is the best? And I know a lot of people like the covered call option because Warren Buffett make it popular. But the truth is that no, all these strategy are just strategies. They are just an instrument. Is for us to understand the market. Later I'll explain to you. Then you choose the different strategy. It's never about which strategy is better. It's always about okay, I'm gonna share with you very shortly how to choose the different strategies. And all these strategies always growing. What do I mean by always growing? This is always some bright guys will always come up with different lake, and they will combine a few lake together and form a new strategy. So the strategy is never ending. Okay, so why I'm not option expert, because I'm not the guy that know how to do the different leg and invent a different leg and call a new name on the option strategies. So for me, I'm just I just choose among the instrument like this. Okay, for this scenario, I just want to do outright call. Very simple as that. Means that I want to have limited risk, but I'm confident that market highly likely is going to go up from here quite soon. Okay, and quite fast, because this hammer speaks to me quite dearly. Now, how to choose the different option strategy is this. Now, it must always derive from our view of the underlying market. Now, what do I mean by that? Okay, later I'm going to show you how to choose the different option strategies. Now, first you have to develop a view on the market direction as of now. Say, for example, if you are looking at market right now, you study into the past behavior. As of now, you have to develop a view. Now, it's okay that your view are not too strong, but the stronger the view, the better it is. Now, so the view could be either you're bullish, bearish, or volatile bullish, or volatile bearish, or whatever the case. You also have to determine the time, how soon it will come if you're bullish. And you can choose between a limited risk, unlimited risk, or you could choose the reward as well, limited reward or unlimited reward. Now, say for bullish, at the point in time I'm bullish, I think will come very soon, but I want to have, remember, I want to have very limited risk. I'm unwilling to sacrifice 1,200 point losses. Okay, I just want to pay a good premium. If I'm wrong, I lost a premium, that's about it. But I'm expecting the market to really climb a lot. So therefore, I want this reward or the profit to be unlimited. So at the point in time when I studied into the underlying market, my view was on the 10th of November, I'm very bullish. I think will come very soon. I want to have a limited risk, but also an unlimited reward, because I think the market is going to charge up. Okay. Now, so what happened here is that, you know, the stories that later the market really charge up. Now, what I did is that you go to the option finder. So what you could do is that on my website, I have included the option finder as well. This is what you can do. You can use my website. You can go and Google option finder. You'll find all these, okay? So you can go to weipedia.com, resources. You go and look for the option strategies. When you click here, you go to the option finder, okay? Now, at the point in time, I'm bullish. So when on this outlook of the underlying means that how you select the different strategy, first of all, you as a trader or investor, you have to develop a view. It is never about which option strategy is better than the other. It's never that way. Now, at the point in time, I'm bullish, so I click bullish. Now, the next thing, remember that my profit, I want to be unlimited. So I choose, and loss, potential loss is limited. I just want to pay a premium to buy this option strategy. Now, then when I click find strategy, they will give me a few options. Okay, some are a little bit more complex with a few legs, but I prefer something that's very simple. Just want to do a buy call option. Okay, so if you click here, it will explain to you how a buy call option works. You can go and try that out tonight. Okay, so basically, I just want to introduce you how to read into the market, how to select whether you want to trade outright or do you want to adopt options into your trading or investment portfolio. Okay, with that, I just have the next 5 minutes to give you some practical to study about the market tonight. Then after that, I'm going to take Q&A for the next 10 minutes. So again, that if you find that whatever I share is interesting, you want to know more about a CME product, you could take a picture, and these are all the QR code. You can study about them over this weekend. Okay, let's go to the practical session right now, based on what we study. And let me just check on, because of no news, who is the winner. So there's no clear winner yet, right? So basically 238, 213. I'm looking at my Google Chrome right now. If you're not looking at Google Chrome, someone can just send me a message here. Okay, now we're going to look at the live market right now. It's just unfortunate because when I prepared this, I was expecting that market will be very volatile right now, and we can read off the market from here. So basically what this is the E-mini Dow Jones, E-mini S&P, E-mini NASDAQ, and this is the E-mini Russell. So what we could do is we can analyze. Maybe I just choose the E-mini S&P right now. Okay. But because of the result not released yet, so there's really no analysis to be made here. But what I showcase to you over the last 45 minutes. I hope that in days to come, when the clear winner is announced, you could pick up something from the live market here. Now, what if the other possibility is this? What if Trump wins or Biden wins? Whoever wins, to me, that's not my topic tonight, right? My topic tonight is about how to study into mass market behavior and what is the mass market telling us about its future direction. That's my concern. Now, so on the day, whoever is a clear winner, what if the market is not moving much? Now, my suggestion is that then you continue to keep track the next few days. Now, until the day you could see that there's a significant movement during that day, and especially if you could see a hammer, and that could be the day you form an opinion, or you could see an inverse hammer, then psychological, you have to input the psychological factor into it. Then you also have a view that perhaps market is going south. Now, it may be on the day itself, there's a clear winner. Now, it may not happen during the day. Now, it may happen after some weeks later. Now, what I suggest you to do is that always look at, maybe you can try every weekend. What you could do is that you can look at a weekly chart, which is what I did. I look at a weekly chart right now, right? So if you could see that very clearly why the March recovery, it was because of this piercing body. It was the last week of March. It kind of overwhelmed the loss of the third week of March. Okay, so this is a piercing body, so that became a reversal until today. Now, as you keep track after the winner has been announced, in days to come or tonight, I do not know, market is not too volatile, but it may take some weeks to develop. So what I suggest that when you have the time every week, you may also consider to look at the weekly chart as well. So sometimes the weekly chart may give us some hints. If not, we can look at the monthly chart as well. Okay. Now, so I have this idea here. I look at the quarterly chart for the US market. Okay. Now, the quarterly chart, it kind of speaks to me that US market as a whole is quite resistant. Now, why I say so? Because if you recognize a quarterly chart, it means that it measures from January to March. And this second quarter, third quarter, and of course the fourth quarter of 2020 have not ended yet. Now, so if you could see that the first quarter, that means from Jan to March, it didn't speak well to me because it was a engulfing body. It was bad. Now, this whole thing, it represents is an engulfing body. So I keep track very clearly since the first quarter of 2020 that I felt that the US market for S&P will be resisted. Am I right? I think I'm quite right. And the third quarter have passed. If you could see that there was a false break and the market closed at below this all-time high, the January high. And the fourth quarter became very important. It may be Biden may become the president of the United States of Trump, but whoever wins, I'm going to keep track on the fourth quarter of 2020 for S&P. If the market closed weak at the last day of December, so generally for the next the whole year of 2021, I will have some idea how to make my investment work and how to trade for the rest of the entire 2021. Okay, so now the thing is this, again, I felt that because of the first quarter of 2020, it sent me a strong signal that resistance is already there, and I could see very clearly that the third quarter there was a false break, and the fourth quarter is trying really hard. Okay, so now the market, whether it's going to continue its bull run, to me this resistance line is really important. It has to close above the resistance line at the end of fourth quarter. But however it closes below, then it spells some trouble for the US market in some months to come for next year. Okay, I just want to give you some idea how you can look at it. If the daily you do not see anything that's interesting, continue to look out for the market for some ideas in a weekly market, monthly market, and if you could see that I'm also looking at the quarterly market as well. Okay, so our take this time. We have the, okay, before that I say that some of you may be interested to look at you want to get hold of the slides tonight because you want to study the policy science of how the different mandate is going to impact the market. Yeah, so you let me know, you just do a scan here. Let me know if you want the slides. Give me about 1 or 2 days, I will send it to you. You can scan it. The next thing, how we could get connected will be this, my website. If you want to go to the option strategies to find out the option finder, you can go from here. There are also other e-learning material that you can find on the website itself. Okay, so this is my Facebook page. I will put up a lot of thoughts and insight about the market, so do like it. How you find my page is my name, Kon Hao, joined together. Please like it or follow it, so whenever I post a article or some thoughts or insight about the market, then you'll receive it. Okay, so that's my YouTube, Instagram, Weipedia, and lastly that's my email address, konhao@weipedia.com. so I welcome questions. If you have some market insight you want to share with me, let me know. I would love to spar with you. Okay, with that we'll go to the Q&A segment. Any question, Min Hui, so far? Okay, you could submit your questions if you have. I would like to point your attention that you have any idea about behavior science, about how to study the market, how to study into the live prices or the historical prices. Yeah.
All right. So okay. Hi, Kon Hao. Yeah. The only question we've received so far is, what do you think is the best strategy right now considering the tight race in the elections?
Again, the question, what's the best strategy considering?
The tight race in the elections right now between Biden and Trump.
Oh, very simple. The best strategy right now, right, is not to place your bet at this point in time. Because if you're gonna place your bet, you're really betting. Betting means that you're who knows, yeah. So the whole idea about investment and trading is this: let the dust settle. Let the dust settle means that whoever who wins, say if Trump is gonna win, it seems like the interim result shows that Trump likely to win, right? Now let's say if Trump became the president of the United States, if he won, let the market react first. Okay, so that means before that you don't place your bet because you're just really betting, right? Because I don't like to place my bet like that. Is nonsensical. So, but I would like to place a position after Trump win or Biden win. So let the market tell me what should I do next. For example, the 9th of November 2016, right? It was a very, this is a very good question, and it's a very clear answer to reply a question right now is this. Now, 9th of November, it was their election day in 2016, but I let it settle. 10th of November, then I do my analysis and I realize that I have a view. Yeah, because then he became a clear winner and the market also settled. When the market settled, the daily chart settled, it gives me an idea how to manage this view. And I also have an idea on the measured risk. What if I'm wrong? How much am I going to risk it? How much am I going to cut loss? It was 1,200 points. So everything became very clear. Yeah. So please don't place a bet right now. At least for me, I do take risks, but I do not do risky business. It sounds the same, right? But it's a whole world of difference. Now let me just repeat if you like this statement, right? I enjoy taking risks, but I do not do risky business. So yeah, so that's one way that can help us to overcome whatever data you're waiting. Let it announce first. Let the market react to it. Then after that, you read into the market and ask yourself, so what is the market telling me about this announcement? Then you make your you start to make your position right. Okay, so do we have another questions?
Yep, our next question is, what happens if we see a hammer tomorrow? How should we react?
If you see a hammer tomorrow, it depends on how wide the hammer is, right? Say, for example, if the hammer is just an ordinary hammer, it's uneventful. Say the last few days, the range has been, or the last average, the last few days, the range has been about 400 points averagely. Let's say you think about the last 1 month average, about 400 points. But today, if you see the hammer, the market range is still about 400 to 500 points, then I will not consider it that seriously. But however, if the hammer, today the range is extraordinary wide, okay? It means that it could be 1,200 points, is about 2 times more than the ordinary, right? Then I will take this hammer more seriously. So I may consider to do the same strategy, what I did 4 years ago. So you also have to qualify the different hammer. When we study in hammer or whatever patterns, right, is always studied into the market psychology. So make sure that the it speaks to us that period. There's a lot of fear. There's also a lot of confidence represented into that one period itself. Okay, good. I think all these questions are really technical. I like it a lot. Is there any other questions?
Yeah, I think that will be all the questions we will take up today because time is almost up. And
Yep.
for those we didn't manage to answer, we will do so via email.
Yeah,
Yep.
so for those that you find that it's quite intrigued that you want to learn more about behavior science, do join me for, go to my website, look for this program called Invest and Trade with Precision. Okay, so I'm going to hold this program end of the year. So I'm going to help you to discover more about how to understand all these market psychology and how to create a precision entry to your investment and trading portfolio. Okay, thank you so much for staying through. Most of you for the last 1 hour. It's really my pleasure. And thank you, CME, for inviting me. And thank you, Flip Futures and Min Hui, for inviting me for this very special day for 2020. Thank you so much.
Thank you, Kon Hao, for sharing with us your insights, and thank you everyone for your time and attention. We will be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And you can also drop us any lingering questions you may have in the post-webinar survey that will appear shortly, and we will reach out to you accordingly. That's all for today. We hope you found this webinar insightful. Thank you and good night.